Last month, the board cut the official rate to 4.1% as underlying inflation falls back into the target range. We've got our business team on hand for the decision. David Taylor will join us with his analysis from the Reserve Bank in Sydney, and Alicia Barry is in the studio with me. Alicia, let's start with you. What are the chances of a move today?
I know there are a lot of hopeful home borrowers for a rate cut today, those relying on interest income, perhaps not so much. But it would be a big surprise if the RBA did cut interest rates today. Markets are betting just an 11% chance that we would see a cut today in April. Those chances increase as we head out to May with 66% bets, if you like, and July 83% chance priced in by the market. But the reason the chances are so minimal today is because the RBA, after cutting the cash rate in February, as you say, to 4.1%, appeared very reluctant in their cutting and warned the market not to get ahead of itself when it came to betting for more than 2 rate cuts this year. And it has taken a fairly cautious approach when it comes to inflation. Although inflation on a monthly sense has now been back in a headline sense in the target band for 7 months in a row, it really wants to see that trimmed mean or underlying inflation sustainably in the target band. And it would probably really like to see the quarterly number that we don't get until the very end of April before it really assesses the true picture of what inflation has done at the beginning of the year. And the other factor is the global uncertainty, where a day before the so-called Liberation Day, with Donald Trump unleashing his tariffs across the globe, Australia likely to be included in the bunch, it's very likely the Reserve Bank doesn't want to do a preemptive move and cut and get more of a picture about what those tariff implications are going to look like for the economy. So most economists are suspecting that the RBA will sit on the sidelines today, as are the markets. So as I say, it'd be a surprise if we did get a cut today.
Well, a lot riding on it, particularly given we're in the frame of an election campaign. We'll talk to you more in just a moment. Now to business reporter David Taylor, who is outside the RBA in Sydney. David, what are you expecting, and I guess what factors will the Reserve Bank be looking at?
Yeah, g'day, Dan. Look, I think the majority of economists and market analysts are expecting rates on hold today. There's an outside chance, of course, that rates will be cut. But what the Reserve Bank is waiting for is the first quarter core CPI number. That's the number that strips out all the volatile items, and we'll get that on April 30th. And that will give the Reserve Bank a sort of a green light to have hard official data to show that inflation is indeed back down or very close to the target range of between 2 and 3%. So the Reserve Bank is once bitten, twice shy, and will wait for that data in order to make the second interest rate cut of this cycle. But in addition to that, part of the reason, Dan, why they're hesitant is because the jobs market is still relatively tight. So the unemployment rate is about 4.1%, and the bank had assumed, as had Treasury, that the unemployment rate would need to rise to about 4.5% to take pressure off inflation. Because, of course, the lower the unemployment rate, the more stress there is on price rises, because people have money in their pockets and they can demand higher wages. So the fact that the jobs market has remained so tight is great for those people in and out of looking for work. But, of course, it means that there's hesitancy from the Reserve Bank to cut rates in case they're cutting too soon.
And this is a particularly interesting meeting, isn't it, David? Because the new board is sitting for the first time, and there's been a lot of discussion about that. Just how significant is that change?
Well, I'm not really sure, because you've got 2 boards. One is a governance board and the other one is specifically focused on interest rates decisions, but as was the previous board focused on interest rates decisions. So this is a new monetary policy board that is entirely focused on the interest rates decision, and the other people that have moved to the governance board are more focused on the runnings of the Reserve Bank. So I personally don't think it'll have too much of an influence on the actual decision itself, but it's perhaps interesting that there is a different dynamic of people on this board. So some people, we call them doves and hawks, those people who are more in favour of maybe raising rates or lowering rates or keeping them the same. So there's different personalities on the board, and that may contribute to today's decision. But other than that, I don't really see much difference. It's an objective decision on where interest rates should be, Dan.
Well, I think it'll be particularly interesting to see that that point about perspectives of who is saying what, and does that change the way that the board more broadly is looking at what's happening and what sort of impact that might be having for the nation. We are expecting those numbers. I understand they've just come. Alicia?
Yeah, as expected, the RBA has kept the cash rate on hold at 4.1%, so no surprises. Very little market reaction expected as a result of that, and probably some disappointed home borrowers today. They will have to wait until the May meeting for another chance at a rate cut. But I do have the Deputy Chief Economist at AMP standing by. Diana Messina is with us now. Diana Messina, have you had a chance to see what the RBA is saying in relation to this decision?
Well, judging by the post-meeting statement, I'm just looking at the comments here. The board said that it's going to continue to rely on the data and the involving assessment of risks to guide its decisions. Is going to continue to pay close attention to developments in the global and financial markets, and it's still determined to keep inflation or to return inflation to target. So quite a neutral bias, I'd say, on interest rates. So not really signalling that they're ready to cut rates again just now, but at the same time clearly keeping the door open for that possibility. So I would say that the bias is quite neutral from the board. Michelle Bullock, the governor, may give a bit more away at the post-meeting conference, though. Sometimes the tone in that can be a little bit different to the post-meeting statement, and I'm of the bias that I think that she will sort of give a bit more of a dovish bias, in that she will be more mindful about talking about the potential downside to rates in the next few months at the post-meeting conference, I'd say.
And my apologies for putting you on the spot there, because that statement just came out as we crossed to you. It does seem like a fairly short statement, and once again, the headline in one of the paragraphs, the outlook remains uncertain. How much of a factor do you think the international developments with the likes of these tariffs that are set to be rolled out late tonight Australian time on Liberation Day are for the RBA?
Well, it is definitely a source of uncertainty for them when it's especially thinking about its longer-term inflation forecasts. But from a short-term point of view, I think that because we have such a small direct relationship in terms of trading with the US, that the direct impact of the tariffs are not going to, one, hit us too hard, or two, wouldn't be really changing the Reserve Bank's view on short-term movements to inflation. But they would definitely be mindful that over the next 12 to 18 months, their longer-term inflation projections may need to be revised based on what happens to global trade, and particularly if there's a change in demand from the Chinese economy as a result of the tariffs. So I'm sure the Reserve Bank has done plenty of scenario analysis on sort of what the tariffs mean, just like we saw in the budget. The Treasury definitely did some scenario analysis on that, and their conclusion was that it's the indirect impact of tariffs on Australia that has the largest change to our growth and to our inflation numbers. But in the short term, the inflation dynamics in Australia are really influenced by domestic factors, particularly around what's happening to services prices and wages growth, and some parts of the goods sector, particularly around things like food, because fresh food prices have actually been rising a bit in the last few months.
The language in today's statement, as you say, sounds a little bit more neutral than the February meeting post statement. It says that the continued decline in underlying inflation is welcome, but nevertheless there are risks on both sides, and the board is cautious about the outlook. How significant do you think that April 30 quarterly reading is going to be for the RBA, and will that tip the RBA over the line in terms of a May rate cut if it's soft enough?
I think it will tip them to a May rate cut, only because we now have the January and the February monthly inflation data, and that does tend to give us a pretty good read about the full March quarter figures. On our own forecast, we're looking for about a 0.6 or a 0.7% increase to the trimmed mean, which is a little bit below the RBA's own forecast. I think that should be enough for us to get a May rate cut. The quarterly set of inflation data, it has always been important for the RBA. If you just look at every meeting that's occurred after you get that quarterly inflation data, you can see that there's been a much higher chance of a move compared to other meetings. So it is sort of critical And I don't think that the Reserve Bank would right now want to move on some of the monthly inflation figures that it's getting. And we know from the last few months of commentary from officials and from speeches and their post-meeting statements and other communication from them that the bank is still worried and mindful that they don't want to generate this second round of inflation, although the global evidence for that has been that hasn't really occurred in any other country that started to cut interest rates. And most countries have actually had many more rate cuts compared to Australia. We've been a massive laggard from that point of view.
Yeah, and that idea that Australia hasn't moved rates as high as many comparable countries, it's not bringing them down as quickly. Has the RBA managed quite a feat here?
Well, I suppose from the Reserve Bank's point of view, they've been saying that they have this dual mandate of price stability and full employment, and that full employment goal was just as important to them. So from one point of view, I guess our labour market has actually held up better compared to peers like Canada and New Zealand. But compared to a country like the US, actually, they've had very good labour market outcomes too, and they had a higher increase to interest rates. There were other things that were going on in their economy, like much stronger productivity growth, though, and they had much higher wages growth, actually, as well compared to us. So there are a few different things that are going on in different economies, but I do think that the Reserve Bank should be given credit for preserving those gains in the labour market. I mean, I never thought that we needed to take rates as high as some of our peers. Obviously, inflation is coming down at a pretty moderate pace. It's running at 2.4% in headline terms, 2.7% for the true mean. So we have done quite well to reduce that pace of inflation, which is to the RBA's credit. The government cost of living rebates have also helped, though.
At the last meeting, Michelle Bullock warned markets not to get ahead of themselves in expecting more than 2 cuts this year. I believe the market's pricing in almost 3 cuts at the moment. I haven't gone back and checked. What's your view about how many cuts we'll get?
Well, our base case at AMP is that we're going to get another 2 cuts from here. So one 0.25% cut in May, and then another one in August. And the market has currently about 2 to 3 cuts the last time I looked. So our view is sort of in line with that. I guess the market pricing is really also driven by what's going on globally. So because we know that other central banks have already cut by 1, even 2% across some parts of the world, we don't need to cut as much, obviously, because we never raised rates to such a high level, but still we are still going to be a laggard in this process. So I think the market pricing is also derived from some of those global things that are going on. But I think 2 or 3 more cuts this year is quite reasonable. I think that the inflation data will certainly allow the Reserve Bank to do so. But at the same time, we don't need to be extremely aggressive in cutting rates, because actually our growth profile is sort of picking up a little bit. Things aren't too bad. The labour market is improving. So it's not like we have a disaster that we need to respond to by urgently cutting interest rates. A slow and steady cutting cycle, I think, is the right way to go.
Diana Messina, thank you so much, and thank you for jumping in right as that statement was released and getting through it so gracefully.
Thanks, Alicia.
And Dan, as you heard there, Diana Messina saying that's a fairly neutral statement from the RBA, but we will get more from the Governor at 3:30 p.m. this afternoon and more clues about the tone and where the RBA's thinking is on rate cuts. Yeah,
we'll be watching that one closely. We'll bring that to you live here as well. Let's go back to David Taylor now. David, you've been looking over the statement from the Reserve Bank that we've just been hearing about. What stood out to you?
Well, Dan, it's interesting because the Reserve Bank has got a heck of a lot to work with. It's a very uncertain time for global financial markets and a very uncertain time for the global economy. So that word uncertain keeps on coming up. You have to remember that in the past, the Reserve Bank wasn't so reluctant to maybe, put the finger to the wind and work out roughly where things were heading and make a judgment call. Those days are gone. And because of the uncertainty and lack of foresight for the economy, in the global economy, the Reserve Bank really does have to wait, as Diana Messina was saying, for that first quarter inflation number to give them confidence that inflation is in fact falling. But again, the phrase at the end of the statement that really stuck out to me was the fact that the Reserve Bank had said that it was gaining confidence that inflation was returning to target. And earlier this year, we did get that rate cut But Michelle Bullock, the governor of the Reserve Bank, made it very clear that that rate cut was designed to unwind or delete the November 2022 rate hike. Sorry, it's 2023 rate hike. So it's just a little bit unusual because normally in a business cycle, you would have rates going up and then a rate cut and then the beginning of the cycle of easing. We haven't got that this time. As I said, that's partly due to the uncertainty that we just don't know what's around the corner, but also to do with the fact that it's just possible the economy isn't yet ready for rate cuts. Mortgage borrowers certainly are ready for rate cuts, but the economy may not be. And I'll just explain very briefly why. The statement points out that productivity is still too low. Now, with a tight labour market, in order for workers to demand higher wages, productivity needs to lift. If it doesn't lift, those wage rises become inflationary. So what the Reserve Bank is saying is, well, look, it doesn't look like low unemployment's contributing to inflation, but productivity is still too low. And so they're going to be watching that very carefully over the next few months. Productivity needs to lift before the Reserve Bank can be confident to cut rates. But in addition to that, we've got so-called Liberation Day coming up Thursday, Australian time. We don't know what that will do to global inflation and therefore Australian inflation. And we've still got some big ticket items in the services sector of the inflation basket. So think out-of-pocket healthcare costs, insurance costs, the cost of building a new home, and of course rental price inflation. Those items in the basket are still kind of sticky. So with all that in mind, the Reserve Bank has actually said, and Alicia Barry pointed out this earlier, that risks are now on both sides. The Reserve Bank is saying there is a risk that inflation could fall, and that would be wonderful for millions of mortgage borrowers, because that...
Oh dear, apologies. We were just getting to the final point that David Taylor was making there. Apology, we lost that link. Let's head back to Alicia Barry now. And Alicia, have we seen any or much reaction from the market so far?
Not really. As David was saying, the RBA is weighing up those domestic inflation risks and the uncertainty caused by the global geopolitical situation. But when we look at the market reaction, because this was so widely expected, there hasn't been all too much. The ASX 200 index has picked up ever so slightly. It was sitting at about 2/3% higher before. It is now 3/4% higher. And the Australian dollar has also picked up just a little, from 62.51 to 62.56 US cents. So there you can see it's really at the margins. Investors were expecting this decision, and they'll be looking very closely, or listening very closely rather, at what Michelle Bullock has to say in just under an hour's time.
Yeah, indeed. And that's where we'll leave our rates coverage for now. Alicia Barry, thank you. And just a reminder, as Alicia was just mentioning, we'll be hearing from the Reserve Bank Governor Michelle Bullock in the next hour, and you can watch that news conference here on the ABC News channel at 3:30 Australian Eastern Daylight Time. We're also expecting to hear from Treasurer Jim Chalmers, as well as the Shadow Treasurer Angus Taylor, in the next half an hour or so. Do stay with us. We'll bring you those to you when they become available. Let's bring in political reporter Tom Crowley. So, Tom, no surprises for the campaigns today, but how will they be seeking to frame this news?
Well, Dan, if there were a political version of the markets terminal that Alicia was just reading off, it too would be flat. This is exactly, as you say, what both parties expected, and it leaves the economic narrative poised delicately in a position where both sides are able to make, different cases about the past, the last 3 years, with an election campaign where the past is so much of the focus. Labor, this is really, in a sense, the narrow path come to fruition. What both the Albanese government and the Reserve Bank from the beginning said was rates being not quite as high as they are in other countries, but staying there for a little longer could deliver an end to inflation while preserving that low unemployment rate. That has essentially happened. And the soft landing that the RBA governor has been talking about for some time, well, on the aggregate metrics, we are pretty much there. The unemployment rate is low. The RBA may not have cut again today, but it said on the information that it has that it's continuing to gain confidence that inflation is coming to heel. Already underlying inflation sits just slightly above 3, headline inflation a little below that. We've had that without the recession, without the spike in unemployment that other countries have seen. That is mission accomplished as far as the RBA was concerned. But when federal politics is involved, well, you can't tell voters that you're having a soft landing because they're fixated, understandably, on what's been a painful 2 or 3 years, a bumpy descent. And that is really what the election campaign is all about. Not the soft landing, but the bumpy descent. It may be that things are coming in hand. It may be that there was a rate cut that's now starting to flow into people's pockets back in February. But we know that voters are still feeling frustrated. They're fixated in particular on the price level. Prices may not be rising as fast as they were, but they are still much higher than they were 3 years ago. That's given Peter Dutton and the coalition the chance to say to people, well, do you feel better than you were 3 years ago? And the answer for a lot of people is no. That's where the election campaign is really focused, not so much on whether we've turned a corner. That's where Labor wants it to be, but on the frustration voters continue to feel about their hip pocket.
And more broadly, we know that US President Donald Trump's fresh tariffs are coming into effect this week. What's the likely impact on the election campaign?
Well, for the election campaign and the Reserve Bank, it's sort of the looming Trump-shaped shadow that hangs over this week in particular, of course, with the deadline day for Trump's tariffs looming late on Wednesday or early on Thursday, our time. That's the day when we'll find out whether perhaps Australian beef and pharmaceuticals might be in line for tariffs. It looks, as the deadline gets closer, less and less likely, frankly, that Australia is going to get an exemption. That will have political implications for two leaders who are jostling over trying to convince voters that they're better placed to negotiate with Donald Trump. Anthony Albanese's line has been, well, I'm not going to negotiate away things that matter to Australians. We will let the Americans do what they'll do. We'll keep making our case and we'll hope that they hear it. Peter Dutton instead saying he believes he could go over there and strike a deal. So difference in approach to the leader, but the economic fallout will become part of the question as well. We don't expect that even if Australia does have tariffs imposed, the economic effect will be particularly large. That's what both the Reserve Bank and Treasury have said. The direct effect is likely to be pretty modest, maybe sort of 1 to 2% of GDP at the very most in the worst case scenario. What we're really worried about is the blowback from a global trade war, a chilling, perhaps global inflation and a global recession at the same time. Those things would have ripple effects back here on our shores. And generally speaking, what you hear from both Michelle Bullock and Stephen Kennedy, and I would expect to hear some more on it from the Governor this afternoon, uncertainty can itself be the killer, because if people are nervous, they're less likely to perhaps invest or make major spending purchases. People are just watching and waiting to see which way Donald Trump and the global economy will go. That brings a new set of economic challenges, perhaps an economic chilling that the Reserve Bank and both sides of this election will be watching very closely.
Political reporter Tom Crowley from Parliament House in Canberra.